Congratulations! You found the Pirls Stock Market Commentary for Sunday, August 16th, 2015. Market breadth. With this past week's market fractional advance, our bull-bear point and figure ratio fell from 0.54 to 0.52, falling slightly further into bearish territory. The total count of securities in bullish or bearish patterns fell 3% to 3,176. The count of bearish stocks decreased 1%, while the count of stocks in bullish patterns decreased 5%. The Pirls PNF Market Breadth Summary Chart shows us a market now 12 consecutive weeks in bearish territory. Paid subscribers have access to the Open Office Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, then Register, and following the prompts. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, fell 57 points for the 16th decline in 28 weeks. At a negative 543.19 points, it continues below all 9 tops above plus 100, below the February 2015 bottom, the April 2014 bottom, and continues above 2 of the 4 bottoms below minus 100 in the last 3 years. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in neither accumulation nor distribution mode, with average daily volume lower than the prior week. In the last 2 weeks, the Nasdaq had 2 accumulation days and 3 distribution days. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Nasdaq ended in neither accumulation nor distribution mode on higher average daily volume. Momentum. At Thursday, 8/13 close, the CCI 20 daily had 6 consecutive days below zero for a change in Woody's trend to down. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 56 weeks ago, while the daily CCI 20 began a Woody's downtrend this past week. The CCI 20 weekly, continuing in a Woody's uptrend, declined from plus 47.55 last week to minus 3.97, still within the plus or minus 50 range for a valid zero-line reject long entry signal if the CCI 20 weekly rises next week. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and all of the bottom 5 are negative. Bullish S&P Retail continues in the top 5. Comp Tech has left the bottom 5. Bearish brokers and disk drives continue in the bottom 5. Semis has entered the bottom 5. Networkers has left the top 5. Gold and silver has re-entered and leads the top 5. Focus this week from www.davidstockmanscontracorner.com. The Great China Ponzi, an economic and financial train wreck which will rattle the world, by David Stockman. Some key points are the following. There is an economic and financial train wreck rumbling through the world economy, namely the Great China Ponzi. In all of economic history, there has never been anything like it. It is only a matter of time before it ends in a spectacular collapse, leaving the global financial bubble of the last 2 decades in shambles. The same folks who brought you the myth of the BRICS miracle would now have you believe that China is undergoing a difficult but doable transition. China's leaders are neither wise nor deft economic managers. In fact, they are a bunch of Communist Party political hacks who have an iron grip on state power because China is a crude dictatorship. But their grasp of the fundamentals of economic law and sound finance cannot even be described as negligible. It's non-existent. The truth is, the 25-year growth boom in China is just a giant, credit-driven Ponzi. Any fool can run a central bank printing press until it glows white hot. The overwhelming share of players in what has become a central bank-enabled casino are now de facto statists. They believe that the agencies of the state can and should peg money market interest rates, prop up the bond market via massive monetization of the public debt, and eliminate contagion outbreaks in the equity and other risk asset markets. It's too late for a soft landing and managed deflation of the great China Ponzi. China has upwards of 400 to 500 million tons of steel capacity that will be idle once its construction boom stops and the rest of the world throws barriers up against its exports. That amounts to economically destructive malinvestment on an unprecedented scale. In 3 recent years, China used more cement than did the United States during the entire 20th century. To arrest capital flight, Beijing will have to do the opposite of what it has done for the last 20 years. That is, it will have to shrink the domestic money supply and banking system in order to sell dollars and euros, rather than expand domestic credit in order to sequester dollar liabilities, that is, treasury bonds, at the PBOC. In due course, China will be aflame with campaigns against corruption and enemies of the state as it seeks to cope with its collapsing financial bubbles. The resulting deflationary spiral will suck the global economy into its vortex. And Wall Street will go down for the count, because this time the Fed will be utterly powerless to reverse the tide. Thank you for tuning in for this week's Sand to Pirls Stock Market Commentary, featuring the proprietary Bull-Bear Point and Figure Ratio Market Breadth Summary Chart, compiled by Donald Pearl, www.s2pmarketsignal.com. Hoping that you are enjoying a peaceful and pleasant weekend, that you are looking forward to a great week coming up, and wishing you true success.